Hi, I'm Dave Elder, Wealth Manager and Partner here at Merit Financial Advisors. And today we're going to be talking about investing in an election year, quite honestly, not because we think it's a very important topic, because we've heard from you, our clients, that many of you think it's an important topic. And whether you're on the right or the left, I've been hearing both fear and irrationality from some of our clients as far as how the elections may impact a financial market or the economy. So the first thing comes into question, how has it worked in the past? Well, one thing that happened in the past that we've realized is election years tend to be like normal years in that the fourth quarter on average is the strongest quarter of the year. That's almost all the time. It's not every year, but if you look at it more often than not, that is the strongest quarter. One of the other things you will find is after what we have had over the past 6 months, a big run up in the market, typically you'd have some consolidation just looking at the chart, whether it's in an election year or not. So don't let, if that happens, to be confused with natural behaviors of the market and the impact of politics. And then also, as we see big swings like we've had later, how do we take advantage of them? First thing I want you to remember when you're investing in an election year is don't pay attention to the news. What is their job? Their job is to sell ads, get viewers, get clicks, sell magazines, and sell newspapers. And so what they're really trying to do isn't tell you the news, they're trying to get you to watch their show. And when you look at it that way, it's a completely different objective, which is why I challenge people, if you are going to watch the news, try to make sure it's a balanced approach. I promise to you, the exact same issue is going to sound completely different if you hear about it on Fox News versus MSNBC. And guess what? My opinion only, but the truth lies probably somewhere in between. Also, if you look at history, and right now you're seeing a mountain chart by American funds where they've shown what would have happened over time if you had invested in 1934 and just left it in one of their funds. Guess what? Every single year they are pointing out above this mountain chart why you shouldn't have invested that year. What was scary in the world? And as scary as right now looks, there are many times in history that have been much scarier. One of the biggest that stands out to me is 1944. Think about it right now. Putin's kind of scary, not as much as Adolf Hitler. Our economy might have inflation and other issues, not as bad as the Great Depression. Violence in the Middle East? Well, I've read the Bible. There's always been violence in the Middle East. Guess what there will be in the future? You look at something like possibly Ukraine falling. In the 1930s, France, a much bigger, more economically important country, literally fell to Germany. And guess what? Look at us now. What have we done? We've all survived, all gone forward, and all had success making money. So here's some stats on elections. First of all, you'll see non-election year average performance. You'll see presidential election year and then midterm election years. And we took out 2002 and 2008, have that on the right, for the reason that those had very odd economic circumstances going on in those elections. Happy to go through any of those on a one-on-one basis. But what you'll find is all these different types of years, on average, give positive returns. Is there a correlation, for example, though, to why a non-election year tends to give higher returns than an election year, whether that be the presidential election or midterm? I don't know. It could be a coincidence. It could just be something that happened. But it's very hard to pin that down on a direct correlation. Also, let's look at this chart. This is one of my favorite ones. This is about how the stock market has performed under different presidents since 1926. What you will find is it's made money under Republican presidents and Democratic presidents. And I would argue under most of them, if there was a political reason the market was going up, it often had to do with people who had been in office before them, whether that's Congress or the presidency, and the economy, not anything they actually did. So even if there is a correlation between politics and investing, it's not always a predictable one. And that's the main thing I'm trying to stress today, is that elections, while they may create impacts on the market, they do not always create and often don't create predictable impacts on the market. And then it's always important as a history student of the market and an investor to keep in perspective that bull markets tend to run much larger and longer than bear markets. So even when we have pullbacks, we can rest on that long-term view we believe there will be profits as there historically always have been. Thank you for your time today, and I hope this video has been helpful. If you'd like to meet with myself or one of our other advisors, please click on the link and we will connect you with the right person. Tell us a little bit about your situation. And one thing I love about being at Merit is we have advisors that can serve all kinds of people. We'll try to pair you up with the best person. Thank you and have a blessed day.